Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Hedera and its token HBAR. None of the content is financial advice. Let's get started. Over the last 7 days or so, HBAR has outperformed wider crypto market, rallying by about 31%. If you look by rallies by market cap, you can see most of the cryptos are rallying, but again, exception with ADA, none of the cryptos have rallied more than 30%, at least of the top 20 or so. We did cover Link and ADA on the channel in the last couple of days. You can check those videos on YouTube channel Crypto Weeklies. Now the market cap of HBAR is coming in at around 10.7 billion, and by market cap it's ranked number 13th. Volume at around 600 million. In terms of the tokenomics, about 84% of the max supply is in circulation, so which is a good sign for any market cap growth getting reflected back in price. So you can see over the last 1 year, this is the price chart on a log scale, and if you compare this with market cap chart on a log scale, you will see that since November 2024, when the market cap grew essentially 10x from 1.6 billion to 1 point at around 16 billion. Similarly, price also grew from 4 cents to 1 point at around 9x of that at around 36 cents. So the market cap and price are growing hand in hand, which is a good sign. In terms of tokenomics, 42 billion HBAR are in circulation of the 50 billion max supply. So let's get started with the technical levels, and then we'll conduct the machine learning price forecast and regression analysis and accumulation strategies. So from a technical analysis level, these are the Fibonacci levels of HBAR since its last bull run peak at around 57 cents. It did come in this in this 2024 rally close to that 0.618 level at around 36 cents at its peak. Now it has dropped below a couple of Fibonacci levels to that 0.38 level, and when it dropped below the 0.38 level, the drop coincided with the 20-week simple moving average and the 21-week exponential moving average at around 21-22 cents, and there has been a bounce since that point in time. So you can see that the renewed bullishness for HBAR coincided with the drop to the 20-week moving average, and essentially HBAR did hold that as a support, the 20-week moving average as a support. So that's a good sign. If there is any lower high in mind, the first level to watch is that 30 cents level at around 0.5 fib level. So if it struggles to break that 30 cents level in the upcoming rally, if there is a rally, then there could be a sign of a lower high formation. If on the other hand the market exhibits a good sign and a continued bullishness, then there could be a further rally. By a lower high, I mean this structure that HBAR made in 2024 March, where there was one high and then the second high was potentially what we are in this U-shape recovery, and then a lower high, then continued by that lower high. There was a series of lower highs and lower lows. So just something to watch out for. Per our machine learning based model for HBAR, again this is trend on weekly price action of HBAR since the token launched in 2019. And this machine learning model, again you can see the similarity between the price action and the weekly averages, says that all things constant, the directionality for HBAR in the next 6 months is slightly sideways and slightly bullish, more of a sideways and slightly bullish from this directionality model perspective. The bull case for HBAR in the next 6 months with no euphoria is one standard deviation bull case at 68 percentile confidence is between 29 cents and about $1. So that's the bullish side of things. If on the other hand there is a continued series of sell-offs like HBAR and had since about May 2024 till about October 2024, if we are in that kind of an environment, the price could see the lows at around 8 cents, between 8 cents and about 20 cents. Again, the purpose of these models is not to tell what has to happen in the market in this time period, but more so be prepared of all of the possible outcomes with some magnitude based targets in mind. So for example, how high could HBAR go and how low could HBAR go. Prices can do only three things: go up, down, or go sideways. So it's good to know what are the theoretical ceilings and floor, and that is what we aim to calculate using machine learning and AI as an approach, as well as statistical measures such as confidence level. So hope you enjoy this content. If you did, please give us a like and subscribe. Also these valuations are also available. The ceilings are available at a weekly basis in a tabular format as well as in a graphical view. Or in this chart, the way to interpret this is the pink line is the base case column in the middle. To its left are the 3 standard deviation bear cases, to its right are the 3 standard deviation bull case. The way to interpret this is, for example, towards the end of March of 2025, the base case is at around 23 cents price. There is a 68% chance that the price stays between 15% per the model and 37%. There's a 95% chance the prices are within 10 cents and 60 cents. There's a 99.7% chance that the price are between 7 cents and $1.05. So that's how you interpret your interpret the model per the risk reward as well as any expected value related calculation. So none of the content again being financial advice. So let's get moving with the regression based fair value for HBAR. Per our polynomial regression model, which is a non-linear model, helps identify the fair value in the bull case, in the bullish rally as well as the bearish bottoms, accumulating below. If you apply 1 or 2 standard deviation residual to the fair value, this is the 1 standard deviation residual applied to the fair value, accumulating below this green line in the bear market, usually historically speaking has been the best time to accumulate HBAR. You can see instances in May 2022 till December 2022, as well as between September 2020 and January 2021, and similarly during October and November of 2024. And we were on the channel, we were making a lot of videos related to HBAR during the course of that November and December time period. Again, that would be somewhere 3 to 4 months, again around thereabouts 3 months ago. You can see lots of videos related to Hedera and machine learning based price forecast on the YouTube channel. So if you want to stay updated, you can follow along on us on the YouTube channel as well as on this website cryptoweeklies.com. all of the content available for free without any sign up or any ads on the website. So there are multiple ways to follow. If on the other hand we that is the HBAR gets a rally back to the 1 standard deviation residual to the upside, which kind of sets the peak for the non-euphoria phase of the market cycle. That peak for HBAR is at around 70 cents, whereas the fair value is at around 40 cents. The 1 standard deviation residual applied to the fair value, that is the mid bull market or the bear market bottom, is at around 23 cents for HBAR. And you see, if you follow along this yellow and the green yellow and the green line, the price spends about 68% of the time within this within these two lines, which is regression based bands. The 2 standard deviation bottom, which attempts to identify the eventual market cycle low. It did a great job in identifying the November 2024 bottom, but again, as we go further down the regression based bars, the likelihood of price going to that level is to the bottom as well as to the top is significantly low. Again, there is no guarantee that the price goes to that eventual highs as well. Again, even if it does, it would spend the price would spend only a handful number of weeks or days or minutes in both direction, in the bottom as well as in the top. And you can see the price is spent about 95% of the time within these orange and the dark green bar. So that's where the regression based analysis of HBAR takes us. The SMA model, or the simple moving average based model, identified this December 2024 top at around 37 cents when the risk levels were elevated to 94%. Now the risk levels are at around 27%. So if the risk levels were to go back with that hypothesis that in the upcoming rally the risk levels could go at least to, let's say, the 60%, which is a conservative estimate, the price at that point in time could be. So with that 60% target, if the prices were to go to that risk level, the price could be per our model at around 41 cents, between 41 cents and about 48 cents. That could be a moderate target for HBAR in the coming rally, if there is a rally. In terms of the DCA model, which takes into consideration the polynomial regression model that we saw at a weekly level, this is applied at a daily level. So this model also tries to identify when it's the best time to DCA HBAR with the risk levels color coded. So this is again whenever the risk is less than 10%. Again, you can see that essentially identifying the best time to DCA. If you have a higher risk tolerance, then anything below 20% risk, but again you would be catching a falling knife during the essentially the cliffhanger phase of the bear market. So right now, per this interpretation of the model, risk is at around 9%. If it were to go back to, let's say, 30 to 40% risk, which is a great estimate of what a beginning of a sell-off phase of the price action looks like. So at between 30 to 40%, the price predicted by this model is between, again, 43 cents and about 53 cents. So that's the target for HBAR for an intermediate peak. The eventual peak could be a between 60 to 80%, between 74 cents and about 94 cents. So that's another estimate provided by one of the models. We at the end evaluate all the models and have a aggregated composite interpretation of all the models. The time weighted average price model helps provide an accumulation zone for high quality crypto projects, where in the bear market, where the price trades below the time weighted average price, which is this blue line, provides a great time to accumulate. This model was developed, again, all models are developed personally by me. This model was released sometime during the June-July phase of 2023 model, and we made several part of the price action, and we made several videos, especially during the between the June 2024 and November 2024 capitulation of HBAR, where the price was significantly below the time weighted average price. Right now the time weighted average price is coming in at around 11 cents, so that level could hold support in midst of a bull market. Again, in the last time around in June-July of 2021, when the prices did cool off, the risk levels went to that score of about 50%. Now we have gone in February 2025 bull run at risk levels below 50%. So right now the current risk level per the time weighted average price model is at around 60%. Estimation of all the models helps provide a risk reward based target for HBAR. Current price at around 25 cents. With a composite weighted risk at around 26%, so almost 1/4 risks. Estimated bull run target with this estimation is at around 93 or 94 cents, which is kind of congruent with the DCA model at around 80% risk level. Estimated reward with this framework at around 3.7x of the current price of about 25 cents. So with that, I'd like to conclude by saying that the estimated bull run target for HBAR could go as high as about between 74 cents and 94 cents. The first target to watch for is definitely if HBAR could rally back to its fair value at around 40 cents, before that intermediate resistance at around 30 cents and 36 cents, which are the 0.5 and 0.618 fib levels, and at 0.786 fib level at around 45 cents. So with that, I'd like to conclude and hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.